Residential real estate prices in Abu Dhabi remained stable during the third quarter of the year, but transaction volumes slipped due to a decline in investor sentiment. Property consultants JLL, as part of their Q3 2015 Abu Dhabi Real Estate Overview report, said that the decline in property transactions was a trend that is expected to continue in the short term. It added that it is expecting single-digit rental growth during 2015, following 17% growth in 2013 and 11% recorded in 2014 as supply and demand became more balanced. In Q2, JLL reported that the market was at a tipping point, with its future direction being dependent on the extent to which government maintained domestic spending in the current period of reduced oil prices. During Q3, JLL said it has become clear that the level of domestic government spending will reduce in the short term as the government remains cautious and reallocates funds to regional priorities. Approximately 700 units were added to the residential stock during Q3, with the delivery of 2 buildings in Hydra Avenue on Reem Island and the C59 building in Rawdat. With no major deliveries during this quarter, the total residential stock has remained almost the same as the last quarter at 244,000 units. Meanwhile, the UAE's insurance sector is expected to grow 15% this year. That's according to Ibrahim Azabi, the Insurance Authority's General Director. Speaking at a forum to discuss progress in bringing more of the authority's services online, Azabi said that premiums are growing across the board and were expected to rise to 38 billion dirhams this year from 33 billion dirhams last year. Mr. Azabi also said that the authority would be increasing its oversight of the sector to ensure fair deals for consumers. 2 years ago, the insurance industry introduced new regulations to protect consumers. Among other requirements, insurers' paid-up capital was raised to 3 million dirhams from 1 million dirhams. A PricewaterhouseCoopers report last year said that the insurance market in the Middle East had significant growth potential, with an average insurance take-up of just 0.3% in life insurance and 1.1% in non-life insurance in 2012. The report said life insurance was particularly underdeveloped in the UAE and Saudi Arabia and predicted that the insurance sector would experience a wave of mergers and acquisitions. Master developer Nakheel has awarded a contract for nearly 27.5 million dirhams for traffic signals and road improvements at Dubai's Jumeirah Village Circle. Nakheel has appointed Dubai-based KTC International Contracting for the work, which involved enhancements and traffic signal installation at 29 major junctions within the 811-hectare community. The work is expected to begin in a few weeks' time and take 10 months to complete. Residents at JVC can look forward to easier access to the community via a new entry and exit road from Dubai's Hessa Street, for which Nakheel issued a tender this week. Construction will begin when proposals have been received and evaluated and a contractor appointed. Arabian Centres, the largest developer, owner and operator of shopping malls in Saudi Arabia, has hosted a media roundtable in Dubai earlier today to discuss the emerging trends in the retail real estate market in the GCC. A panel of industry experts from the region revealed how the retail real estate landscape is changing, with centres emerging as new retail powerhouses, especially in the Saudi market. They pointed out that KSA market is in fact the largest economy and biggest retail market in the GCC region, with a contribution of 9.4%. They also attributed the continuous interest of international retailers in the KSA market to several key factors, including the ongoing economic diversification, population growth with young demographic, and the increasing demand for brands and services. Additionally, retailer expansion in Saudi Arabia accelerated in 2010-11 as the country became recognized as a stable base, less subject to turbulence. According to the panelists, the overall consumer spend in Saudi rose 18% year-on-year in August, with clothing and apparel retail market being one of the fastest growing in the world at 11% per annum, only 20% less than the US per capita. The country manager of Al Futtaim in Saudi, Richard Morley-Kirk, said Saudization has created 3 million female workforce in 4 years, adding an essential revenue to the KSA retail market.
The growth is being driven by Saudis, and that will continue, not from expats. Saudi is becoming more and more self-sufficient in terms of getting things done. The government is really encouraging Saudis to work. 42% of our workforce is currently Saudi, and that's been growing literally every month. And we'll soon be, we hope by next year, almost 50% of our workforce will be Saudis. But on the whole, Saudi is a very contained market. There are 20 million Saudis, and that's growing every year. So it's not dependent on tourists. It's had a very strong local market. So we're not necessarily trying to pull tourists from going to Qatar, come to Saudi. We have our own customers. They're local people, and they want to shop. And they want to shop in good international malls because they travel so extensively. So, of course, they want those brands in Saudi. And the opportunity for us and other retailers is massive.